The situation with Michael Saylor, the 36 Bitcoin that he sold off, this very much reminds me of this situation over here. This was the collapse of the Terra Luna protocol, the UST stablecoin. That collapse in May 2022 fueled an entire bear market. Michael Saylor might already regretting his selling. But let me show you where I see the parallels. There was the Anchor protocol, advertised as a reliable savings protocol. It gave 20% per annum. And when we promise a fixed high yield versus a volatile cryptocurrency, this is what can happen. The Anchor protocol completely collapsed. It attracted more and more deposits over time because of that high yield. But the yield wasn't sustainable, and it did not take much to tip over that house of cards. Hi, my name is Gerhard. I've been in the crypto space for the last 8 years. I hit my first million 3 years ago. In this video, I want to share the data points that I look at in order to outperform the market. On average, I did this over the last 5 years by 2% per month over just buying and holding Bitcoin. With this recent crash, we have hit a new all-time high in the trading portfolio. This is the last 2 years. This is when I started to publish my trades in real time for the premium members. Every one of our trades is currently in profit. On average, a trade returned 5.1% with an average holding duration of 27 days. So I'm 100% transparent about my performance, about my trades. I don't think there are many other people here on YouTube that are willing to go that far. Now, isn't that quite irritating? Michael Saylor just sold roughly 3 million worth of Bitcoin. He sold 32 BTC. He holds more than 800,000 Bitcoin. He made a micro-transaction and the entire market is panicking. That's how fragile the psychology in the market is. Everybody is now speculating with artificial intelligence stocks. Nobody wants to trade altcoins anymore. But where's the parallel here with that Anchor protocol collapse? Here's the parallel. It did not take much money at all in order to kill the entire system. This here is the Curve protocol, and there were 200 to 300 million worth of trades in one of those stablecoin pools that got executed, that temporarily moved the exchange rate of one stablecoin versus another. So UST got sold, and that temporary DPEG raised questions if it really makes sense to hold that crypto-backed stablecoin. Now, if you think this user interface already looks quite nerdy, at the time it looked much worse. But yeah, all it took was 200 to 300 million to just temporarily DPEG UST in the 4 pool. And that created a lot of doubts, and people withdrew their UST just to be safe, right? Maybe UST isn't that safe after all. Now, I think the exact same thing is currently happening for Michael Saylor and his strategy, formerly known MicroStrategy. Have a look at the situation at the time. Here we've got the stablecoin market cap relative to the money supply. Whenever this is going up, that means money is flowing into the system. Whenever this is going down, that means money is flowing out of the system. Whenever you are withdrawing your hard-earned money from the crypto ecosystem, you want to get a transaction to your bank account and you send your stablecoins over to your Binances. Then you are indirectly destroying stablecoins. When you are depositing your hard-earned fiat currency into Binance and Binance sends it over to a stablecoin custodian, and that custodian then buys treasuries and mints new stablecoins on the blockchain, then this is going up. Now, what is this first white line and the first red line? The white line marks the peak of the bull market. So we saw the peak in Bitcoin, but we still continued to get some inflows. Then those inflows halted. And then the red line, that's when Terra Luna collapsed. So we were already in a bear market. We already fell by roughly 50% from the all-time high before the collapse of the Anchor protocol. That, by the way, was also before FTX collapsed. Subsequently, after that DeFi collapse, did we see another drawdown by roughly 50%. So this bear market in 2022 was multi-layered. We first had a loss of momentum while there was still money inflowing, but then a DeFi protocol, a major DeFi protocol, went completely bust, and that then led to the continuation, which then in the end also led to FTX blowing up. Now, where are the parallels? Here are the parallels. We have already seen our bull market top. Since then, we have come down by roughly 50%. During that decline, we don't see any stablecoin inflows anymore. And if now Michael Saylor gets forced to sell more Bitcoin, which is not yet certain. But if there's something systemic blowing up, then we will see net outflows out of the system again. And then very likely Bitcoin could fall further. Will it fall again by another 50% from here and go all the way down to 33K? I'm not so sure, but isn't it interesting to see those parallels? Usually the way this happens is that some market participants already have doubts around the current setup. So in the early days, this was the highly promised return by Terra Luna that was not sustainable with Anchor. Now we've got Michael Saylor that buys Bitcoin that some people also call a Ponzi scheme. Maybe Michael Saylor cannot always buy Bitcoin. Maybe at some point he has to sell Bitcoin. Maybe the main buyer of Bitcoin ceases to buy. The market is looking ahead. And of course, that looks like just clear panic. Everything is selling off. But there is a rationale behind this, right? If the buyer of last resort, not the Fed and not the government, but in crypto, it's Michael Saylor, when he's not buying anymore, that's a problem. Now on paper, the numbers still look great. This is the number of BTC that are being held by Michael Saylor or by Strategy. All he did was buy more. He even said you should never sell your Bitcoin. You should rather sell your kidneys before you sell any of your Bitcoin. Mortgage your house, take on as much debt as you can, just buy Bitcoin. That was his mantra. Seeing him now, just selling a sliver of his holdings. Again, he's got more than 800,000 and he only sold 32. That little change in direction is enough to spook the market. He clearly didn't have to sell those Bitcoins. He simply did this to make a statement or to maybe get the market used to Michael Saylor not always buying. But the market did not like that signal at all. And there's a very good chance that Michael Saylor is now regretting this. He's not come public since that crash. And if the crash continues and Michael Saylor has to sell some significant amounts, maybe he's getting turned into the devil. Maybe everybody will call MicroStrategy a Ponzi scheme. Now let's have a look at what happened since Michael Saylor started buying more aggressively. So let's take this data point over here. The middle of November 2024. That's when he moved his holdings from 250,000 Bitcoin to more than 800,000. So close to 600,000 more Bitcoin being purchased in the span of less than 2 years. Here is Bitcoin dominance. So the red line, that's when he accelerated his purchases. Now isn't that interesting? Bitcoin dominance actually since then went down. Bitcoin as a share of all of crypto did not increase. Then check this out. This is now Bitcoin's market cap relative to crypto, excluding the stablecoins. So this is a stablecoin adjusted chart. Since Michael Saylor started to buy more aggressively, that adjusted dominance metric went up by only 4% or so. Since he bought, the Bitcoin price actually went down. Now there are several ways to look at this. There are more influences on the Bitcoin price than just the purchases by Michael Saylor. But if you excuse that performance by saying this was not a favorable environment for crypto, that's not true. The Nasdaq 100 during the same time period went up by close to 50%. The fundamental question is the market now overreacting? So does it make sense to buy the panic now? Or is this the beginning of something worse? As for example with Terra Luna, right? UST started to depack and then the entire system imploded, leading to another drop in all of crypto prices by more than 50%. Are we going to see something similar repeat again? I do not have a crystal ball, but I want to show the metrics that I now closely monitor. What we look at here at the bottom, that's how many Bitcoin Michael Saylor has bought. In orange is the number of Bitcoin that are currently in profit. In red is the number of Bitcoin that are currently in losses. What we've got in blue, that's MicroStrategy's average cost basis of Bitcoin. So MicroStrategy on average is already in losses. Michael Saylor bought Bitcoin for a higher price than it currently is. But really, the situation starts to become problematic once the value of MicroStrategy is lower than the Bitcoin holdings on the balance sheet. Currently, MicroStrategy still has a premium. That's written over here on the website. The MNAV. It's at 1.22, so the net asset value is 22% higher compared to the Bitcoin holdings. Now have a look at this. This is MicroStrategy's price relative to Bitcoin's price. Since Michael Saylor started to buy Bitcoin, he actually outperformed the underlying asset by close to 100%. But if he were to fall now just a bit, so those 22%, then there's no justification anymore for MicroStrategy to buy aggressively. Yes, there are still ways to do further purchases. More debt can be issued, but we have seen in the past when MicroStrategy was in unrealized losses, when the Bitcoin price was below the cost basis, there was pretty much no activity in terms of purchases at all. The purchases really ramp up when Bitcoin hits new all-time highs. Michael Saylor tends to buy high, and usually he doesn't sell low. He now sold a bit, but usually he just holds through those bear markets. And that's potentially what could happen going forward. And the big scare, of course, is what happens when Bitcoin falls further and can't recover very quickly, when it can't go beyond the average cost basis that long term. If then Michael Saylor has to be a net seller long term. That's the big danger. If Michael Saylor is forced to unwind his Bitcoin position, and that's gradually just to pay off the debt, then that can create even more fear. Something that would justify the stablecoin market cap to go down, and something that would justify a continuation of this bear market. In the end, it's all about the right risk to reward. It's about exploiting market inefficiencies, and that's how we made money long term. Again, we have hit a new all-time high in the portfolio again. If you want to check out the premium membership of this channel, there is a 7-day money back guarantee. So in case you don't like the content, in case you don't like the trades, just message me within the first 7 days and I'll refund you 100%. There's really no risk for you. Also, once you join, I will send you my favorite trade. You just enter that trade, you hold it for a month, and I think the likelihood of that going up over the next month is very high, because we're going to bet on a falling altcoin that tends to have very high token inflation, that tends to perform very, very poorly, and then we hedge that position by going long another asset that tends to outperform long term. But more details are also explained in other videos. You're probably not watching this channel for the very first time. If you do though, then feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time here on YouTube, or potentially see you on Premium as well. Looking forward to chatting with you. Cheers.